Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now the Bitcoin price has confirmed a break back below this important level of support, which means that this breakout to the upside was just another fake out like what we saw back here. So in just a moment, I'll be talking more about that and Ethereum as well later in this video. And I will also be covering the Fed meeting, which is less than 24 hours away. So definitely make sure you're watching this video all the way to the end so that you don't miss out on any of this important information. First of all, just giving you a quick update on what happened in the US stock market today. This right here is the Nasdaq 100 index on the daily time frame, and as you can see, the Nasdaq 100 index has now pulled back below this horizontal line of resistance, which was coming into play at around 12,100 to 12,200. And this short-term pullback in the stock market over the past few trading days has mostly been due to the fact that companies are now reporting their earnings for the second quarter of this year, and especially when it comes to the tech stocks. Today, we actually saw around $4 trillion worth of companies report their Q2 earnings. And a few of those companies that reported their earnings today were some of the biggest tech companies in the world. Companies like Microsoft, Google, and Visa, for example, all reported their earnings today. And overall, the earnings for those big tech companies weren't actually too bad. We did have some misses here and there, but obviously in this type of economy, there's a lot of people expecting companies to perform under expectations. So due to those earnings for those major tech companies being not so bad, we've actually seen a small post-market rally, which essentially means the Nasdaq 100 index has gone to the upside outside of the traditional trading hours for the stock market. So right now, this doesn't actually show it because this right here is the official Nasdaq 100 index chart. And this chart right here only shows what's happened during the trading hours. But if you take a look at the QQQ, which is essentially an index fund for the Nasdaq 100 index, this chart right here shows after hours trading in these blue boxes. And as you can see, from the moment those big tech companies reported their earnings and from the moment those earnings came out not so bad, we ended up seeing a small post-market rally, which will reflect in tomorrow's market open in the Nasdaq 100 index. So essentially, tomorrow's daily candle in the Nasdaq 100 index on this chart right here will open above today's daily candle close. But even though a lot of those earning report fears are now gone, which is good for markets, we still have some other important events coming up within the next 2 days, which people could be fearful about. And those two important events are, of course, the Fed meeting, which is happening tomorrow, where we're due to see another interest rate hike. And I'll talk more about that in just a moment. But also in just 2 days from now, the official GDP numbers for the second quarter of this year get released. And it is extremely likely that the US GDP contracted during the second quarter of this year. So it's extremely likely that those numbers are negative, which in that case, considering the first quarter of this year was already a negative GDP quarter, having the second quarter of this year also being a negative GDP quarter would officially put the US into recession. And obviously that is based on one of the longest running and most used definition of a technical recession. And I'm saying that because as we get closer to that day where the GDP numbers for Q2 come out, which would technically confirm a recession, as we get closer to that day, there's now politicians starting to try and redefine what a recession actually is. And coincidentally, under a new definition for what a recession is, if that GDP result for the second quarter of this year does end up coming out negative, then under the new definition, there would still apparently be no recession whatsoever. But anyway, with that being said, talking about the Fed meeting, which is happening in less than 24 hours from now. In fact, if you want to know the exact time of this meeting, it is happening at 6 p.m. GMT time. And by the way, the moment we get the result for this Fed meeting tomorrow, I will immediately tweet the results over on my Twitter, which will of course be a rate hike, but I'll be sure to keep you up to date in real time over on my Twitter. So if you haven't followed me on Twitter already, what are you waiting for? The link is down below in the description and also in the pinned comment. And of course, it is completely for free. But anyway, this chart right here shows the federal funds rate, which is essentially the Federal Reserve's target interest rate. And the most basic view of this chart right here is pretty much when this line goes up, when the interest rates go up, that is bad for markets, bad for prices. But then on the flip side, when this interest rate goes down, that is good for markets and good for prices. And obviously, if you've been keeping up to date with any economic news, you would know that the reason why they're raising interest rates is to try and combat inflation, to bring CPI inflation down. done. And so until the inflation of consumer prices starts coming back down, the Fed is likely going to continue to raise interest rates. And right now, the federal funds rate is sitting at 1.75%, which is 175 basis points. And after the next Fed meeting, which is once again in less than 24 hours from now, based on consensus and what the trading economics forecast is predicting, the federal funds rate after the next Fed meeting tomorrow will be sitting at 2.5%, so 250 basis points, which is essentially predicting an interest rate hike, a raise in interest rate by 75 basis points or 0.75%. And in fact, we can take a look at what the futures market is currently pricing in for the outcome of the next Fed meeting tomorrow. And right now, the market is currently pricing in a 75% chance of a 75 basis point hike tomorrow and around a 25% chance of a 100 basis point hike tomorrow. So basically, the vast majority heading into this Fed meeting is expecting a 75 basis point hike, compared to only that 25% chance approximately of a 100 basis point hike, a hike of a full 1%. And considering the fact that higher interest rates are worse for markets, and also considering the fact that less people are pricing in a 100 basis point hike, if we do end up seeing a 100 basis point hike, then that could be really bad for markets in the short term. But on the flip side, the majority is expecting and already pricing in a 75 basis point hike, which basically means if we do end up seeing just a 75 basis point hike tomorrow, then that is actually good news for markets. We could actually see a bounce after that news, considering the market is already expecting a 75 basis point hike, or perhaps even worse than a 75 basis point hike, with some of the market expecting a potential 100 basis point hike. So only time will tell what the actual number will be tomorrow, but that's just a quick explanation on what could be bullish or bearish and what the market is currently expecting. But what is really interesting is the futures market isn't only pricing in the probabilities for the next Fed meeting in less than 24 hours, they're also pricing in the probabilities for all of the future Fed meetings over the next 1 year or so. And if you look at all of these probabilities for what the federal funds rate will be on each of these future Fed meetings, based on what the futures market is currently pricing in, we can see that after tomorrow's Fed meeting, the Federal Reserve has potentially reached their U-turn point, which basically means whatever rate hike we see tomorrow, it's unlikely we're going to see a bigger rate hike than that in the next Fed meetings. So whether or not the Federal Reserve hikes interest rates by 75 basis points or 100 basis points tomorrow, it's very unlikely that the Federal Reserve will continue to increase their interest rate hikes with the next few Fed meetings. Because obviously, looking back over the year, we've seen 25 basis point hikes, we've seen 50 basis point hikes, and now up to 75 basis point hikes. And these probabilities are basically saying that we're not going to see any higher interest rate hikes than the interest rate hike that we'll see tomorrow. Now, I want to make it clear that that does not mean we're not going to see any future interest rate hikes. It means that the interest rate hikes in the future, especially over the next 1 year or so, might not end up being any bigger than the hikes that we've seen recently, especially talking about tomorrow's hike, and especially if tomorrow's hike is a 100 basis point hike, because we don't actually have a Fed meeting next month in August, and the highest probability outcome for the Fed meeting after tomorrow's Fed meeting, which takes place in September, the highest probability outcome is an interest rate hike of just 50 basis points if we see a 75 basis point hike tomorrow. Which means, yes, when it comes to the September Fed meeting, interest rates will still likely be rising, but not exactly rising at the rate that they have been doing, and especially the rate that they do tomorrow. And if you're looking at the November Fed meeting, there's a fairly even split in the probabilities between a 25 basis point hike or a 50 basis point hike in November. And based on that outcome in the November meeting, we could end up seeing another 25 basis point hike in the December meeting if in November we only saw a 25 basis point hike. But if the outcome for the November Fed meeting is another 50 basis point hike, then one of the most likely probabilities for the December Fed meeting is no interest rate hike. That is right. The Fed could stop raising interest rates as early as the end of this year or potentially early next year, talking about January or March. And then if you keep looking at these Fed meetings, meetings further and further out into the future, you can see that the range of probabilities widen as we go further into the future, which makes sense. But we can still see in these future Fed meeting probabilities that the most likely outcomes for the Fed meetings in June and July next year, so around the middle of 2023, is when the Federal Reserve could potentially start cutting interest rates again. That is right, they could start reducing interest rates again around the middle of next year, potentially. And all of this is extremely important to understand because the Fed is one of the most powerful players in the entire market and the entire economy. Because, like I said, for as long as they're continuing to raise interest rates to fight inflation, as they have been doing for this year so far, and they're set to do it for potentially the rest of this year, then that basically puts a massive downwards pressure on markets as it squeezes out a lot of debt. But on the flip side, like I was saying earlier, if they drop their interest rates, then that is bullish for markets. It allows more lending at cheaper rates, which is a bullish thing for the prices of assets. So these Fed meeting probabilities actually tell us potentially how long a recession might end up lasting for. And based on these probabilities, the rest of this year might not look too pretty. But going into 2023, and especially around the middle of 2023, we could actually see a decent recovery in a lot of markets. So basically, within the time frame of the next 12 months is potentially going to be the time frame giving us the best buying opportunities that we can get. So obviously, it is important to not just rush into anything all at once because these things do take time to play out. But at the same time, you don't want to be waiting for years for a recession bottom because by then, it's likely based on these probabilities, for example, that markets would have potentially bottomed out sometime between now and around the middle of next year if they haven't bottomed already. But anyway, getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart. And as you can see just here, over the past one day, we have seen a break to the downside below 22,000. And so far, we have seen one daily candle close below 22K, which is one confirmation for this break to the downside. So technically speaking, the daily Bitcoin chart is now looking more bearish than bullish based on this previous scenario here, especially in the shorter term, because what we saw back here at the end of March, early April was basically a small breakout above massive horizontal resistance. And then the Bitcoin price came back down, retested this line, traded around it for a few more days, and then we ended up seeing a daily candle close below that line of resistance again, which was immediately a short-term bearish signal, basically telling us that we're due to see the Bitcoin price pull back a little bit further, mostly in the shorter term at that stage, down towards this other level of support. But then it wasn't until the Bitcoin price started breaking below that level of support that signaled a larger leg to the downside. Now, obviously, we're not at that stage just yet because this other level of support is coming into play at around 19,000 approximately. But a couple important points to mention. First of all, between right now and around 19,000, there are some other short-term levels of support along the way, which I'll be talking about in just a moment. And another important point to mention here is the fact that the daily Bitcoin RSI is still currently in an uptrend, forming higher lows and higher highs. And technically speaking, while the daily Bitcoin RSI is still in this uptrend, that is a bullish sign for Bitcoin. On the daily Bitcoin chart, talking about these intermediary trends within that larger downtrend here. And now, if you zoom into the shorter term, taking a look at the 4-hour Bitcoin chart, you can obviously see that the 4-hour Bitcoin price trend is still bearish. And once again, congrats to those of you who have been watching all of my recent videos here on the channel, especially over the past 1 week, because especially ever since this point right here, where the Bitcoin price broke below around 22.7K, below the 5-day moving average, it was at that point right around here where we had multiple bearish confirmations for the bearish scenario playing out. Obviously, a break below this moving average. Also, by that stage, we had a short-term downtrend forming in the 4-hour Bitcoin RSI and a bearish cross in the 4-hour Bitcoin MACD. So once again, all of these signals were leading indicators before this other Bitcoin dump that we saw over the past couple of days. And in case you're new to the channel and you have no idea how to even make money when the price is going down, I do have a trading tutorial video linked in the description down below and in the pinned comment, right next to the exchange that I currently trade on, which is Bybit. But anyway, what we can see right now is the 4-hour Bitcoin RSI just recently entered into oversold territories for the first time since this previous local bottom that we saw a couple weeks ago. And in fact, if you're going back to the time before that, where the 4-hour Bitcoin RSI entered into oversold territories, that was also at a local bottom for the Bitcoin price. So based on that signal alone, this is actually a good sign for Bitcoin in the short term. But keep in mind, if you're going back to that previous local bottom in the Bitcoin price, the 4-hour Bitcoin RSI briefly entered into oversold territories the first time round. Then we saw a small bounce in the Bitcoin price, and then we actually saw another dump in the price of Bitcoin, which entered the RSI further into oversold territories, and it wasn't until around that low that the Bitcoin price actually started bottoming out for this local bottom. So just keep that in mind. Even though the RSI briefly entered into oversold territories, the fact that it is no longer in oversold territories still means that technically there is a little bit of room to the downside. But with that being said, the room to the downside in the immediate short term is somewhat limited based on the RSI alone. So once again, that is actually a good sign, more of a bullish sign for Bitcoin in the short term, but of course it does not confirm a bullish reversal, at least just now. For that, I would like to see the RSI start forming some lower highs and lower lows like what we saw back here and back here, and I would also like to see a bullish cross in the 4-hour Bitcoin MACD, which would further confirm a bullish scenario playing out, basically another short-term bullish trend. And then for even more confirmation, we can look for a break back above this 5-day moving average, which is currently coming into play at around 22.2k, but keep in mind it is currently lowering on this chart. So basically right now, as of recording this video, technically speaking, we are still currently in this bearish trend. This hasn't actually reversed just yet, but we could be getting closer towards some sort of short-term bullish reversal due to the 4-hour Bitcoin RSI entering into oversold territories recently. And one of the most likely scenarios for tomorrow's Fed meeting is if we see only a 75 basis point hike, that could potentially kickstart another short-term uptrend in the Bitcoin price, similar to this move or this move, for example. But on the flip side, if we do end up seeing a 100 basis point hike tomorrow, then that could send prices even lower in the shorter term. So a lot of this short-term price action, especially over the next 1 to 2 days, strongly depends on the results of the next Fed meeting in less than 24 hours. And what is really interesting to see is if you bring out the Fibonacci retracement tool from this previous low that we saw a couple weeks ago up to the local high, right now the Bitcoin price is currently testing the golden pocket, the most important Fibonacci level. And so that is the level that I am strongly paying attention to for short-term support for the Bitcoin price. And this level, by the way, is currently coming into play at around 20,700. And considering the golden pocket is more of a price range, it goes down towards around 20.6k, so 20,600. And basically, if we start breaking below that level, then I'll be targeting closer towards around 19,000. And now heading into the Ethereum part of this video, this right here is the daily Ethereum chart. And as you can see, we got quite a decent rejection from that significant level of resistance sitting at around 1,700. And obviously, this is no news for the subscribers out there because I have been talking about this level of resistance for over a week now. And also based on where the daily Ethereum RSI was sitting at around a week ago, we will very much due to see a bit of a cool off here in the short term. That's very normal for Ethereum to play out. It's just important for the daily RSI to not actually break this uptrend, because if we start forming some lower highs and lower lows, then that would be a signal that we're actually starting to flip much more bearish again on the larger scale here. And speaking of the larger scale, of course, technically speaking, we are still within that larger downtrend. This has not been broken as of right now, but this intermediary trend within the larger downtrend is currently more bullish than bearish on the daily Ethereum chart when you're talking about the uptrend in the RSI, for example. But of course, the immediate short-term trend on something like the 4-hour chart is more bearish than bullish, which I'll talk about in just a moment. But first, zooming into the 12-hour Ethereum chart, and we can see those short-term bearish signals I was just talking about even more clearly. Once again, that resistance at around 1700. And we also have a bearish divergence playing out right here. And basically for the past one entire week, we've seen a decline in bullish momentum in the 12-hour Ethereum MACD. And obviously these signals as of right now have not actually flipped bullish again. Right now, they're still trending more bearish than bullish. Obviously the 12-hour RSI forming lower highs and lower lows, while the histogram within the 12-hour Ethereum MACD is still heading further into the red territory. But with that being said, if you're zooming into the 4-hour Ethereum chart, we can see that just recently the 4-hour Ethereum RSI brushed against oversold territories. And once again, just like I said on the 4-hour Bitcoin chart, the last couple times the 4-hour Ethereum RSI entered into oversold territories, that actually marked a short-term bottom, a local bottom for the price of Ethereum. But once again, keep in mind, I would also be paying attention to other confirmation signals such as the 4-hour RSI starting to form higher lows and higher highs, or potentially seeing a bullish cross in the 4-hour Ethereum MACD, which currently has not actually happened. We've only got that one small signal of the RSI entering into oversold territories. And when it comes to support levels to watch out for, obviously once we broke that support level that I've been talking about over the past 1 week, coming into play at just underneath $1,500, we immediately saw a drop off in the price of Ethereum as expected, closer down towards around 1,300. And once again, again, if you watched my last video that I posted yesterday on the channel, you would have seen this move coming before it even happened. But just bringing out the Fibonacci retracement tool from the previous local low up to the local high, and we can see that right now the price of Ethereum is playing out a short-term bounce from this exact level of support, which is the 38.2% Fibonacci level, which is the second most important Fibonacci level, by the way, and that is coming into play at around 1,360. And so that is the immediate level of support for Ethereum that I am paying attention to here in the short term. Anything below around 1360, and I'll be looking closer towards around 1280 to 1290 because we do have important support around there based on previous resistance, and anything below that, I'll be looking towards around 1200, 1200 based on the golden pocket. And if you want to know how to profit big on these short-term bullish and bearish moves, make sure to check out one of these videos popping up right here on your screen. The video in the top left shows you how to make profits if the price is either going up or down, and the video in the bottom left shows you how to make profits in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.